Thanks for your company for the weekly wrap. I'm Jessica Amir, a market analyst with Bell Direct. Well, the Aussie share market has been on a tear this week and hit a 13-week high, touched the 6,000-point milestone for the first time since the 9th of March and continued its 6-week positive run. The ASX 200 is now up 32% from its bear market bottom. And looking at the technical trends, as the 50-day moving average, the pink line, has curved upward, that indicates further growth. The market is also charging toward its 200-day moving average, the orange line. So if these two technical trends meet, that will indicate a significant bullish trend for the ASX 200. This week, all sectors on the ASX rose forth as Australia loosened restrictions, China eased its foreign flight ban, and Qantas announced it would increase local and regional flights. The consumer discretionary and financial sectors gained the most, over 5% each. And this week, we also saw the iron ore price hit a 10-month high, bolstering revenue for Australia's largest export division. This saw Fortescue Metals, FMG, BHP and Rio Tinto gain at least 5% each. Plus, we also saw every economic data set, manufacturing, economic growth, retail sales, all meet or exceed expectations, which is always what you want. No one likes surprises after all. The most charge on the stock front this week came from Unibail-Rodamco-Westfield, URW, leading the rise, up 33% to $5.49, continuing to bounce off its all-time lows for the second straight week. The sugar rush for URW is all about the global shopping mall giant reopening most of its centres in France, which account for about 30% of revenue for the business. And URW is also getting ready to reopen its doors in Britain and Spain. Now, Morningstar says although it's going to be a tough time with the shift to online purchases, URW could develop land into residential apartments. It's given the stock a $9.40 price target and a forward-looking dividend yield of 11.2%. Another standout stock, cement and lime business Adelaide Brighton ABC, gaining 24% from Monday to Thursday to $3.36. Citi expects ABC will grapple with competition as a new cement business is on the block in South Australia and its shares could come back to $3. Now, for three key themes to think about next week. Well, firstly, the Australian property developer and fund manager segment is set for strong growth. Given interest rates are at a record low, many solid rent collecting businesses are at attractive prices and they look set to soar on a COVID recovery path, and that's according to UBS and Citi. Other things to think about are, secondly, the looming recession. Now, this week in Australia, we learned Aussie GDP fell 0.3% in the first quarter. Growth next quarter is tipped to fall 5.7%, according to Citi. So if we have 2 quarters of negative growth, Australia will enter its first recession in 29 years. After that, expect a quick recovery of 0.2% in Q3 and 2.2% growth in Q4, helped by the government's 3 job programs, RBA policies and Aussie iron ore revenue ripping. So keep your eye on economic indicators along the way, like business and consumer confidence data out on Tuesday and Wednesday next week. And thirdly, the final thing to keep in the back of your mind is the US triple threat: the economic and health crisis and civil unrest. America is in a much worse shape than Australia. Their economic growth fell 5% in Q1 and Q2 GDP is tipped to tank over 52%, according to the Atlanta Fed. Then a recovery is on the cards. Now, despite their impending recession and risks of a second COVID wave, the stock market FOMO has pushed US stocks up 40% from COVID-19 lows, and e-commerce demand has pushed the Nasdaq to an all-time high. Now to trading ideas to consider. Firstly, with the property developer fund manager segment being on a tear or on the path for recovery, UBS says Centuria CNI is the manager to buy for maximum growth leverage. It's diversified across industrial, office and healthcare real estate and has an investment bond business. CNI's rental income and earnings have been consistently growing for years, and UBS expects this to continue, expecting its shares to charge 30% higher to $2.34. It's a stock to watch as well, as it's not yet in the ASX 200. Now, Citi backs Mirvac MGR with its $20 billion of pipeline opportunities, and backs Charter Hall CHC given it's got no balance sheet debt. Now, secondly, with Australia entering a recession, it's so important to remember that this has already been priced into market. The markets are already looking forward to the recovery. Now, in the meantime, there will be opportunities, always. Magellan and Platinum says you should favour companies seeing a rise in demand and earnings. Now, UBS and Citi rebacked this week CSL as a buy, with many of us getting the flu jab, which is bolstering its sales, offsetting weaker blood therapy demand. Now, UBS expects CSL shares to set another new all-time high in under a year and rise 14%. Now, thirdly and finally, with the Aussie household saving rate doubling this quarter, according to the ABS, Qantas QAN is set to see a surge in flight sales amid pent-up demand. Qantas also plans to return about 40% of its domestic capacity by the end of next month. Now, all reasons why UBS expects Qantas shares to soar to $4.65. Thanks for your company this week. I'm Jessica Amir from Bell Direct. Happy trading, stay safe and enjoy the long weekend.